Every 4th of July, we celebrate freedom, independence from a system that once controlled our choices. But here's the thing, a lot of us are still trapped. Not by a king, yet at least, but by banks, loans, and financial systems that keep us paying interest year after year on things we need to live, like cars. But what if you could buy your next car without a bank, without a traditional loan, and still have your money working for you, earning uninterrupted interest the whole time? That's exactly what the infinite banking concept allows you to do. In this episode of IBC and Me, I'll show you how I'd use my policy to buy a car and how you can do it too. This Independence Day, let's talk about a different kind of freedom. Financial freedom. Buying a car the traditional way usually means financing through a bank, dealer, or credit union. And on the surface, that sounds normal. It's what everyone does. But here's what really happens. You take out a loan for $25,000. The bank gives you the money. You make payments for 4, 5, even 7 years. And during that time, you pay thousands of dollars in interest. You're not building wealth, you're building their wealth. And worse, once you've made all those payments, your money is gone. You don't get that back. You just have a car, one that's lost value every year while your dollars disappeared into someone else's system. Leasing isn't much better. You're still trading control for convenience. Either way, you're using a depreciating asset to fuel someone else's compounding engine. And it's easy to justify. I have to have a car. But what if that car could be the key to building your own banking system? That's what infinite banking lets you do. Here's how infinite banking flips the script when it comes to buying a car. In a regular savings account or financing it through a bank, you fund your IBC policy first. That means your dollars are now sitting inside a dividend-paying whole life insurance policy, where they earn guaranteed interest, plus potential dividends, for the rest of your life. When you're ready to buy the car, you don't withdraw your money. You take a loan against your cash value. This is the key. Even though you're using that money, your full cash value keeps growing as if it never left. You get the car, you stay in control, and your money keeps compounding in the background. Now here's where it gets powerful. If you bought the car traditionally, you'd either pay cash and lose the ability to earn interest ever again on that money, or finance it and pay thousands in interest to the bank. But with IBC, you're paying yourself back on your own terms, and while you repay the loan, just like you would a car note, you're building your own banking system, and your money never stops working. That $25,000 car, it still costs money in a sense, but instead of depreciating in value, it becomes a money-making asset. Because over time, the cash value in your policy continues to grow uninterrupted. By the time you retire, that same $25,000 car could have generated $75,000 to $100,000, or more in compounded growth. That's 3 to 4 times what you paid from a purchase most people think of as a liability. And the best part, you can do it again, and again, and again. Every time you finance a car, a renovation, or a large expense through your policy, you're building long-term wealth, not draining it. Let's walk through a simple example to show how this works in practice. Say you've built up $30,000 in cash value inside your IBC policy. Instead of going to the dealership and applying for financing or draining your savings, you take a $25,000 policy loan against your cash value. The insurance company gives you the loan secured by your policy. You now own the car outright. No dealership loan, no bank involvement, no monthly payment pressure. But here's what makes this different. Your entire $30,000 of cash value is still in the policy, earning interest every single day as if you never touched it. That's the magic of IBC. Now, because you want to keep your system healthy, you treat the loan just like a traditional car payment. You pay yourself back $500 a month over 5 years, or whatever payment schedule you choose. That's $30,000 paid back into your policy instead of to a bank. And during that time, your cash value continued to grow. Even after the loan is repaid, that $25,000 you used to buy the car continues compounding. Fast forward 20 or 30 years. That single car purchase could have added tens of thousands of dollars or more to your retirement wealth. And here's the best part. You've now built your own personal financing system. Next time you need to buy a car, you don't call the bank, you call your insurance carrier. Every time you make a major purchase, whether it's a car, a renovation, or a family vacation, you have 2 choices. 1, give your money away to someone else. Or 2, keep it working for you forever. Infinite banking lets you choose the second option, and it turns everyday expenses into wealth-building moments. It's not just about cars, it's about control. It's about independence, from banks, from debt, from systems designed to profit off of you. So, as we celebrate Independence Day, maybe it's time to start thinking about a different kind of freedom. The kind where you own your system, you control the flow of money, and your wealth doesn't stop growing, even when you use it. If this clicked with you, don't stop here. Watch our other videos in the IBC and Me series, or check out the full IBC education playlist. And if you're ready to take control of your finances and become your own banker, scan the QR code after the video or click the links in the description. This is BreakLoose Financial, wishing you a happy Independence Day. See you in the next one.